After becoming an insurance agent, I realized there were a lot of things I wish I'd known as a consumer. Little things that can quietly cost you money. That's what this series is all about. Today's lesson, a claim that pays $0 can still end up costing you money. That sounded crazy to me too until I saw it happen. A really nice lady contacted me because she wanted to shop around for cheaper homeowners insurance. We found a better policy. I was excited because I thought I was about to save her a good amount of money. Then we ran the final reports. Rejected. The reason? She had a previous property claim where the insurance company paid $0. They paid exactly nothing because the damage didn't exceed her deductible. I felt terrible. I even called underwriting to explain that nothing had been paid out and asked them to make an exception. I begged and pleaded. They couldn't. Now, every insurance company is different. Some companies only care about paid claims. Others have different underwriting rules. I'm not saying every company would have rejected her, but sadly mine did. That experience taught me something I'll never forget. If it's safe to do so and there's no emergency, find out roughly what the damage will cost before opening a claim. Here's why. Let's say a hailstorm comes through and you think your roof might have damage. Or maybe you backed into your garage door, or scraped a concrete pillar with your car, or your dishwasher or your washing machine leaked onto the floor. Your first instinct might be to call the claims department just to make an inquiry and ask, is this the kind of thing I should file a claim for? Sometimes that conversation stays just that, a conversation. But depending on the company and how it's handled, it can also lead to a claim being opened so an adjuster can inspect the damage. Now imagine the estimate comes back at $2,200. That sounds expensive, but if your home is insured for $300,000 and you have a 1% deductible, your deductible is $3,000. Not 1% of the damage, 1% of your home's insured value. So insurance pays $0. You went through the claims process, you didn't receive a payout, and depending on the company you're shopping with in the future, that claim may still show up on your claims history. That's why whenever it's safe to do so, I recommend getting an estimate first. Whether it's your home, auto, or recreational vehicle, the same math applies across almost every policy. If the damage clearly exceeds your deductible, then filing a claim often makes perfect sense. If it doesn't, you've just saved yourself the time and hassle of a claim that wasn't going to pay anyway. And depending on the insurance company, you may have also avoided creating a claim history that could make shopping around more difficult later. Insurance exists to protect you from significant financial losses. The key is making an informed decision before you open a claim. I wish I'd known this before I became an insurance agent, but I know now, and that's the point of sharing it with you. Hopefully it saves you both time and money, whether that saves you $50 or $500. That's real money that stays in your pocket. Money you can throw straight into your emergency fund, your next vacation, or your investments. And if you like this one, I'm building a playlist of similar tips like this. Simple lessons to help you avoid mistakes that quietly cost you money. And you can catch that here. And let me know what you want me to test or tackle next. I'll see you in the next one.